So, in a world full of lies, in this day trading space, everyone's here to lie to you. No one wants to tell you what the actual sauce is because they either want to sell it behind a course or they want to put you in a group or whatever they want to do. But, I made this channel because I just enjoyed trading. I like to post my trades, but at the same time, I'm seeing that people don't want to talk about what actually makes you profitable. So, let's talk about it. I'm going to just jump right into it and you can agree to disagree with me. I think I know ball. I've been in the space for years. So, starting off real strong. You need an edge, right? This is the first one. First item we're judging. You need an edge. And what I mean by an edge is that could be really so many different things. It can be a combination of things that you've pioneered yourself, whether it's a technical edge, whether it's a mechanical edge, whether it's a money management edge. You need something that people aren't doing, that people do not know about, that's not publicly known typically, or like not genuinely known by most people, because that's what an edge is. Because if everyone knew it, then it wouldn't be an edge. It would just decay. So, I would say this is honestly mandatory. You're not going to get very far in the space if you don't have something pioneered secretly or something that you're hiding, quote unquote, or gatekeeping from other people. That's just my opinion. And I don't really, I mean, if you want to debate with me, you can debate with me in the comments. But the truth is, if most people know about it, it's probably not as important as you think it is. And a good example is when we go down the list, I'll let you know. So that's the first thing. If you're ever going to hop into the profitable trading space, you need an edge. And that could be, honestly, it's so diverse on what you define an edge as. Most people would typically think of it as something you see on the charts, but it's so much deeper than that. It can be some gifts that you're carrying, whether it's you have this level of intuition or this level of discernment that people don't have that allows you to see opportunities in specific areas, etc. Or if you have access to resources that other people don't have, that allows you to be able to take advantage of opportunities faster and quicker and larger than others, etc., etc. I'm not going to go too far into that. Basically, you just need to pioneer something that other people do not have access to, genuinely and generally speaking. All right, so let's start getting into the things that everyone knows about one by one. Let's start with risk management. I like the risk management, the judgment zone, all right? Risk management. Let's talk about it. What is risk management? Risk management is a lot of things. It can be how you manage your money, so bankroll management. It can be how you manage your trades in and out of the charts. It can be, let's see, let's think about it here. It can be your percentage of risk per trade. It could be the way that you size in and out of trades, your exit conditions, your entry conditions. Risk management typically deals with a lot of math. It's usually things like thinking in probabilities, understanding variance, understanding random subsets of trades, and how your mathematically defined win rate eventually hits a certain percentage over a large area of testing and execution. And honestly, I think a lot of people get this wrong. It's so well known that people just have a general approach to risk management and they don't actually pioneer this any further. But if you solely, and I mean just only focused on risk management and nothing else, and you would just say that you're longs or shorts are just off of a coin flip, but you had extremely, extremely highly engineered risk management at an exceptional level, at a beast, at a monstrous level. Like you've taken this further than anyone else. Honestly, you would be a lot better than the majority of traders, and you'd probably see profits faster. And why do I say that? Why do I say, oh, ignore the charts or who cares about the all the price action, fundamentals, all these fancy things that people get to look at? Why do I care so much about risk management? I'll give you an example. So, think about professional gamblers, right? Think about professional poker players. Think about professional advantage blackjack players. They're playing by house rules, for example, for blackjack, right? So they can't really control too much. You can follow basic strategy, uh, which is mathematics again. But what is the one thing you can actually control in a casino? You can control when you get in and out of a hand for blackjack. You can control what you're betting, and you can control the size of your bet spread. You see where I'm going with this? Risk management alone allows you to control the amount of money that's on the table. You don't want to put so much risk on the table for every single trade. And I know a lot of people are just like, oh, just use the typical 1 to 2%. Or if you're on a funded account or an eval, it's like, oh, you gotta take a certain amount of risk in the eval. And yeah, that's fine. That's all completely different trading parameters. I'm just saying, in general, if you understand how to manage money, if you understand the idea of variance, if you understand the way that randomization happens to you when you're trading and how an A plus setup can still fail you, an S tier setup can still fail you, and understanding how to deviate your risk, understanding your strategy, I'm telling you, this is gonna take you very far. You don't have to believe me. I don't care if you believe me. I'm just trying to help you. Right? I don't gain anything from this other than you just watching me and whether you enjoy my video or not. And if you do, I'd like to know. I could be ranting, and maybe it could be annoying, and I just want to know. Either way, I just want to talk about what actually makes you profitable, and this is what I think is genuinely going to hard carry you. So it's going in the hard carry category because not only, I mean, it is a core item, but honestly, if you just focus on this and not much of anything else, you could you could last in the markets pretty long. And isn't that what it is, really? It's you outlasting the markets to be able to take advantage of your opportunities when they show up. And that's the core of risk management. It's for you to stay in the game, not for you to get out of the game in one trade. Just blow your shit in like two trades. So, next one. Let's talk technical analysis. And what is technical analysis? Well, this is price action. This is indicators. This is the well known concepts that everyone talks about, right? The retail trading concepts, the head and shoulder patterns, the ICT trading patterns, supply and demand, etc., etc. The moon phase, the fucking wolf blood moon transformation phases of allowing you to know when to buy and sell. It's those. Technical analysis, I would say if you want to get very far in trading long term, you definitely want to have an understanding of price action. You want to understand why indicators work the way that they work, the pros and cons of each, and understanding why technical analysis works. And it's not actually the patterns that you're trading necessarily. It can be much deeper than that. But obviously, if you want to get into day trading, I think it's a core item because That's what starts it all. What gets you into clicking a day trading YouTube video, right? When I was first learning how to trade in years and years ago, I didn't click on the money management video. I didn't click on the trading psychology video. What did I click on? I clicked on the 97% win rate strategy video. That's technical analysis. People trying to draw you in with the easy shit. Technical analysis is the low hanging fruit. That's how you get all the beginners. That's how you get all the noobs. And so it is the core of how you start your journey. So I'm putting it in the core category. Not much to be said about it other than the fact that this alone is not going to make you profitable. And this is so well documented. So if you want to fight me on this, honestly, you're dumb. I know ball. I know bangers. I know bangers, okay? If you solely are only using technical analysis and nothing else, no narrative, no discretion, no nothing else, and you don't have any other skills other than just brainlessly following a pattern on a chart or some sort of signal, no, it's not gonna click for you. Because if it did, millions of other people would have done it already. And we know that. We all know this. So that's why it goes in the core category, but it is not the main thing that you need. It's part of your journey. All right, let's talk fundamentals. I'm a little bit biased on this. News, fundamental trading, following all these men. I'm gonna be honest with you, I don't look at the news. I just dead ass don't look at the news. I don't care about the news. I don't care what's going on. I don't care what Trump's tweeting or when Trump's tweeting. I don't care about the news. I never look at it. Some people use it as a basis of when to trade because it's higher volatility. It lets you know when it's going to be, a bigger range day and whatnot, or when you can anticipate more volume and more volatility and stuff like that. So it lets you know when to stay in and out. For me, I think this is going to be the first item in the your call category. It's your call. If you want to throw this in your strategy and your overall plan as you develop into a profitable day trader, you can. I know that the larger institutions, the market makers or the quant firms, yes, they all use tons of fundamentals. I'm not a quant. I don't have billions of dollars to throw around. I make my money as an individual discretionary price action trader with a little bit of algorithmic trading on the side, right? And which is a developing process for me. I'm primarily a discretionary trader that has, dabbled in algorithmic trading as well. But I'm not going to get into that. That's me. No one cares about me. We just care about getting the real sauce out there, getting the real honest truth out there. Because we got a bunch of liars in the space that's just trying to get dollars out of you. I don't care about your money. I don't need your money. I got my own money. Moving on. Discretion and intuition. Or if you're a gamer, this is what we like to call the XP. This is you as you level up on your journey, right? You start from level 1, you start going up. As you start experimenting and experiencing the day trading life, you're going to grow in experience. You're going to grow in your intuition, your gut feeling, your discretion, your ability to discern good conditions, bad conditions, risk on, risk off. This right here, I think, is an inevitable thing. This goes without saying, no matter what kind of day trader you are, whether it is you are going to discretionary price action trade, whether you're using indicators, whether you're using scripts, algos, EAs, whatever. This is how you get to that. Your discretion, your intuition, your experience that you gain along the way that molds you and that goes based off of your traits as a person and your gifts, your strengths and your weaknesses and what makes you you. All that's trained that's in the subconscious as you continuously stare at these charts, as you continuously make mistakes, as you continuously win or lose and start to tweak and optimize and grow. This grows with you. So honestly, discretion is, I mean, it's either in core or it's just mandatory because like it'll happen regardless. So honestly, I'll just throw it in core for now, but it really could be either or. You're gonna get it regardless, is what I'm saying. It is an inevitable part of your journey. It comes with you. And that's what allows people to become, for example, like 100 people that trade ICT fair value gaps, and there's two out of the 100 that can make it work. But then the 98 start eating dog shit with it, and they blame the pattern trading. And that goes back to what I'm saying. It's just not only technical analysis that makes you a reliable, profitable trader. What it is your ability to understand narrative, your ability to understand other aspects that's happening in the market that people can't necessarily see, but it is something that you've just been trained by staring at that chart, by gaining your experience, by getting your L's and getting your W's and looking at your own data over the years, over the month. That's something that you yeah, I don't there's no really other way to explain it. It is your entire journey as a whole. It comes with you. But I will say, this is what allows you to kind of decide how you move forward. This is why you have so many different people that trade so many different ways. It's because the XP that they gain along the way makes them change their decision on how they trade based off of what fits them. That's why some people that don't like price action, they weigh the pros and cons, they move over to algorithms. That's why people who try algorithms first and they don't like it, and they're like, you know what? I like the pros and cons of price action. They move over there. It is your almost like a pathfinder. It allows you to choose your path as you continue to reach other divergence, as you're walking on the path and you see different roads. Your discretion, your intuition, your XP is what kind of steers you. It's your driver's wheel. So it's a core item. You need it, or else you just can't grow. Next, we got trading psychology. That is the next item. In parentheses, I put Mark Dougie. If you don't know who Mark Dougie is, you're not really in this space for real. Mark Dougie is Mark Douglas, and Mark Douglas is one of the most well-known trading psychology mentors, trader himself. I own his books. I watched all his videos, those super long 5-hour videos. He's the GOAT. I loved his videos when I was first learning. Taught you a lot about trading psychology and understanding edge and risk management, but primarily trading psychology. And so, what is trading psychology? Well, it's a lot of things. It is your self awareness, it is your ability to regulate emotions as you're in and out of trades, it's your ability to understand yourself as a person, your strengths, your weaknesses, is your capabilities as as a budding trader, as you mature as a trader. It's your entire thought process when you're coming to the markets and you're executing price action or whatever your strategy is. It's all of that. It's the in betweens that no one really sees. It's the thoughts that race through your head when you're looking at price going drawdown against your trade or in profit. It's the feeling of you wanting to click the X button when you're either in profit or in drawdown. It's all these things. It's the unspeakables, it's the intangibles. And these are actually make or breaks for a lot of people. And so, trading psychology is one of those things where once you've had enough of it, you kind of either get this very reinforced mindset that allows you to become extremely discretionary and well managed, or you're sick and tired of it and you turn towards an algorithm, you turn towards automation, you turn towards AI to be able to handle and offset those risks of being a discretionary trader. So for me, I think this belongs in the core. It makes sense because these are things that help you decide your direction in trading. And honestly, that's really what it is. Not much else to say about it. I mean, there is, but not for this, not for what we're talking about. All right, let's move on. What's the next item? It's AI. You know, in the modern age in 2026, of when I'm recording this video, AI is all over the place. AI can, I don't know, mop your floors. AI can cook your eggs in the morning. AI can do backflips for you. AI can become your girlfriend and take your virginity. AI can do everything and anything under the sun, quote unquote. So, what do we think about AI? I've seen people try to use AI, like for example, they try to MCP into their trading view or whatever prop firm offers an MCP, like Funded Next or something, and use their Claude to try to day trade for them based off of whatever. But honestly, that is, to me, I think it's dumb, and I'll tell you why. Because I think AI itself is a great resource for research, for creation of an idea that you have, but I don't think it should be your execution. It should not be your operator. I don't think AI should be operating like an agentic AI should be operating off of its own, you know, way of calculating a trade. And why do I say that? Because AI is basically just information from everyone. It's general information that's been just sucked into this void and trained over and over again. And how do you get all this information? It's just what other people have experienced, what other people have prompted, what other existing public sources are. And what do we say about public sources? Anything public and well known is probably not going to work because there's little to no edge, probably little to no EV, little to no alpha. And so you can do you can do quite a few good things with AI, right? Like building your algorithms if you have a general direction and a general thesis and you don't know how to code, or if you're looking to research into specific topics and you don't want to do the scavenging yourself. But I wouldn't rely on AI to be your operator. I mean, at least not now. In the future, you never know what could happen. I think it's I think it's still got a way to go. And to be honest, from it, I think it's advanced pretty quickly from where it's at. And if it advanced this quickly in just less than a few years or so, maybe even a year, you can only imagine how it'll be in a few years. But time will tell. I can't necessarily say AI is going to take over the trading space or anything like that. I just don't know. But what I will tell you is that AI cannot make up an edge for you. There's just no way. All that public knowledge is just going to somehow print out some magic creative idea, original idea. That's not how AI works. AI is not original. You are original. You are the creator. You are the end all be all of your plan, your strategy, your journey to becoming profitable. AI is your assistant. It should not be above you. If AI is above you in your day trading journey, we got an issue here. Now, if you're training an AI based off of, privately, based off of your stuff, you're not using like a pioneer, like a leading model, anything like that. You're using your own AI, ML, NLP, whatever you want to call it, to train your own data set that you've gathered yourself. That's different. At that point, it really is your own thing. So for that, I'm gonna put it in here. It's your call. You want to use AI? Go ahead. I'll tell you right now, I did not use AI when I turned profitable as a discretionary day trader. I did use AI though to help me speed up the process of me coding because yeah, I don't want to sit there and write line by line. Where I'm not a caveman, but it is your call if you want to use it. All right, ranking what actually matters. Next, we got algorithmic trading. Let's throw you in the judgment zone over here. Algorithmic trading. So, automation, bots, EAs, scripts, stuff like that. What do we think about it? Well, what do I think about it? I think it's a rite of passage for some, and I think it is a direction that you can go in if you don't want to be a discretionary price action trader. So, really, I think I think it kind of goes into the quant finance space a little bit too, because we always hear talk about high frequency trading and stuff like that. But in the way that I see algorithmic trading is not necessarily high frequency trading, but just the ability to remove human elements out of your trading. And we all know that human elements is what weakens your trading, because if you were to execute like a robot, you would perform better. That's a fact. Now, the caveat to that is there's one human thing that protects everyone's strategy when they are manual traders, and that is your intuition, that is your discretion, your subconscious training, your experience. That's something that I don't think an algorithm can really pick up on right now. I think an algorithm is great for consistent execution and operation, which is something that humans can't typically do at a high efficiency, but it cannot take advantage of that killer instinct that humans have. And you know what I'm talking about? It's that feeling that you can't explain. It's that opportunity that other people can't see, but you can. That's not something that algos can pick up on. So it's a trade off. It's a pro and con type of deal. I'm not going to say it's the core. I don't think most people start with algorithmic trading. I think most people kind of get into algo trading after they've experienced tech analysis, when they get through the pains and they start weighing their options. So I think, this can either go into the min maxing category or it's your call. And honestly, yeah, where would I want to put this? Because it's not necessarily like you need to do algorithmic trading, but also at the same time, it's a pretty damn good opportunity. Hmm. It also hard carries quite a few people as well. But I think just for the way that you get to it, I would call it min maxing. The way that you find algorithmic trading, I think is part of min maxing. So we're gonna put that there. And if you guys don't know what min maxing is, it's just when you've already done all the general stuff to make you succeed, and you just start adding that extra oomph to it. It's like your final boss mode. All right, let's see. The next item in the judgment zone is platforms. So, the platform that you use, whether you're on Forex and you're using IG Markets, or you're using Forex.com, or you're using Owanda, or if you're on NinjaTrader for futures, or TopStepX for prop firms, or Hanko Trade, or whatever, XYZ, interactive brokers. Platforms don't really matter that much to me. I think that, the whole like competitive lot pricing or competitive per contract fees or all these like little tiny things don't really actually matter uh too much to me, just because the way that I trade. Now I understand that everyone's strategy is a little bit different. If you're a micro scalper on a live account, fees can murder you. If your EV can change dramatically if the slippage is bad, and et cetera, et cetera. I understand that concept, right? The whole idea of slippage, commissions, fees. And if you're Islamic, then you got to do a swap free account. I think obviously it's a core thing in it of itself. You need a platform to trade. But I'm more or less talking about the value proposition. So, not the fact that you need a platform, but the value proposition. Obviously, if it's the fact that you need a platform to trade, duh, it's core. But I'm talking about the value prop, the differentiator for each, and like the necessity. I would say that's more min maxing. You can choose whatever you want at the end of the day. All right, let's talk quant. Now, I'm not a quant. I think that's very clear from the way that I'm talking. I probably sound like a dumbass to most people. I'm not a quant. I don't deal with quant finance and all these crazy mathematical equations. I'm not over here drawing matrices and shit. But I will say, I did not need any of that to make money. And a lot of people don't need that to make money. Honestly, we can quickly say that this is a min maxing item because most people just generally don't need to get into quant finance to do it, unless they're specifically going in a direction where they're trying to create this hedge firm that has a bunch of traders and a bunch of algorithms that are created and et cetera, et cetera. At that point, yeah, kind of necessary. I'm not going in that direction. I think it's min maxing. Although some people take that as their primary path, this is my video. So I'm calling it min maxing. Next, instruments. So what you're trading, whether it's you're in Forex and you're trading EU and you're in futures, you're trading NASDAQ or ES, you're in options, you're in crypto, blah, blah, blah. I think this is more about, I think it's more about your strategy, really, because every single instrument has its own seasonality. Every single instrument has its own way of calculating the risk, whether it's lot sizes or contracts, etc. Right? Every single industry has its own leverage and offshore brokers and what is it? The what's the word I'm looking for? The like the verified brokers. What are those called again? Whatever. You know what I'm talking about? Like the regulated brokers. That's what I was looking for. So I would say again, this depends on your strategy. If you like instruments that tend to react to like mean reversion, Forex is a very strong option. If you like trending price and very volatile price, futures, crypto, it really just depends on your strategy. It depends on the type of trading style that you have. It depends on what you've developed and what you're willing to take advantage of. And you can honestly trade in all of them. It's really like a all hands on deck type of deal. You can hit all the instruments, especially if you're an algorithmic trader. You can have 13 different algorithms and 5 different instruments to trade between that are all hedging against each other, stuff like that. So, obviously, you need an instrument to trade. That's not what I'm referring to. I'm more or less referring to what you're trying to gain out of each instrument. So, going back to the seasonality, going back to like the whole what it tends to do uh, throughout the year, what type of strategies tend to work for whatever. So I'd say that's your call. Your call on what you want to trade. It really depends on what you've developed. All right. So next up, we got the account. So whether you're a live account, whether you're a prop firm trader and you're using funded accounts, obviously you're not a demo trader if you're going to be a profitable day trader. But this really comes down to the way that you trade and the payout structure that you follow. Now, when you're developing your strategy and you're trying to determine your EV, you're gathering data, you're seeing if there's any alpha in there, et cetera, it's much harder to do that in live conditions successfully compared to if you're using a prop firm account like TopStep or Funded Next or Tradeify or Lucid. And why is that? It is because of the imbalance of how you get your money. In a live account, when you fund it with 10K, That's 10K of your dollars, right? That's your money. A full 10K. So when you lose 10K, you're losing 10K. But how much is a prop firm account? 80 bucks for 50K? And you get what, 2K of drawdown? You're paying 80 bucks for 2K? It's a huge shift, right? So much different than a live account. So if you just have some level of EV and you have a high enough pass rate for your funded, from your eval to funded stage, you can expect a payout of some positive amount before you blow it, and then you rinse and repeat. But guess what? That's not actually trading. You're just account churning or account arbitraging. You're just arbitraging prop firm accounts. That's really what you're doing. So you're determining a percentage of passing the eval, and then you're determining a percentage of getting a payout with your funded account. And you can do that with a simple strategy like an opening range breakout. I've coded one. It has a pretty decent pass rate. It works. It makes money. Or you could do the discretionary route, full port your eval, and as long as your expenses are lower than your payout, you're technically profitable, right? But this is the distinction. That's not trading. We know it's not. You're using the same tools. It is a form of making money, right? Arbitraging. But trading is when you get to the live stage and you're in live conditions. And we know that as much as you don't want to admit it. We know that. So, in terms of the use of it for you, what kind of account type you need, if you're going to be a profitable day trader overall, you're going to have to be able to trade in live conditions and not just in prop firm conditions, just account churning. So, I mean, it really is your call, but it really depends. I kind of want to put it down here in doggy because it's really hard to determine because I don't know what kind of path you're going to take. Whether you want to take the prop firm path and build, just build an algo for prop firms or discretionary trade prop firm accounts and churn them out, or if you're going to be a live trader and it's going to be much harder, but if you can do it, you do it. So the reason why I'm putting in this doggy category, like dog shit, doggy style, doggy cream, is because it really is just dependent on what you decide to do. Like it really just can't matter unless you have a path already chosen. So really it's either your call or doggy. I'm gonna just put it in there. And then the last thing that we can talk about is the trading style. So what's your trading style? You a scalper, intraday, swing, position? That shit don't fucking matter. They all fucking make money. They all fucking make money. You can make money doing whatever the fuck you want. All right. You want to hold a position for 10 years? Cool. You want to hold, you know, a position for 10 seconds? Cool. We don't care. I don't care. The whole point is to make money. Who cares what you're trading, how you're trading, why you're trading? As long as you are net positive, as long as you're profitable, that's all that fucking matters. So, at the end of the day, if you look at this list, it is just a few things that you really need to focus on. Find your edge wherever in whatever category, however you want to define that. Focus on risk management. And then, if you just look at the cores, it is just you understanding market condition, market price, price action, and how you want to analyze price. Going through the journey and getting your experience and getting your mind right and deciding whether or not you want the human element in it or not, and just weighing the pros and cons. This is a time game. Most of the time in becoming a profitable day trader, this shit is hard as fuck, right? And no one's gonna tell you that. Some people are just gonna show you their payout after 2 months of following someone's signal, and they're like, "Oh, look, I'm profitable." All right, are you consistently profitable? Monthly, quarter, annually? You know what I mean? And then again, can you trade in live conditions? Or are you just a prop firm trader? There's a big difference there. Now, I'm not saying this because I'm shitting on it. I'm a prop firm trader. Just full disclosure, I have a live account, I have prop firm accounts, I have algorithms. Like I do my own thing, make my own money, right? And that's why I'm sitting here talking to you about it. Now, maybe I'm not so coherent in explaining all this, so I can break it down even further. But I just wanted to let everyone know that's watching this video that most people in this space are just trying to get some money out of you. They're just trying to stack up the bread in their wallet, and they don't really care about yours. And to be honest, I don't care about your wallet, right? I care about my wallet. But I'm not selling nothing to you. I just want to put this out there because there's not enough honesty in the space. I'm not gonna ask money from you in the future, don't worry. Not making no fucking course. Not putting you in no group. I just think I can be a refresher. Someone with raw, real advice, experience, someone who's been in this and doesn't care about getting something from you. The only thing I would really like is that if you fuck with me, then you join the YouTube fam. Because that'd be cool. Otherwise, I'm just talking into the void. But at least as I'm talking into the void, I'm spitting real sauce, honesty, and I'm actually trying to help people just because I'm so passionate about this. I love talking about day trading. I literally don't have a script. I just talk. And that's how much I love this space because I can sit here and talk about it all day. But that's besides the point. So, all in all, this is the list. I'm ranking what I think actually matters. I do know ball. You can't tell me otherwise because I make money, my own. And I hope that this helps you make your own money as well. And if there's anything that you specifically want me to touch on, I'm more than happy to. And besides that, I hope you like this video and we'll talk soon. Or maybe not. We'll see. Take care.